If you're feeling frustrated with your business where it feels like you're working harder than ever, but that bank account just won't move and it feels like a yo-yo, you are in the right place. Money's going up, money's going down, but we're not getting any more freedom, we're not getting more time, and we're definitely not getting any more clarity on what we're doing actually getting us closer to where we want to go. So I am Paul Maskell. I am an outsourced CFO for home service business owners, blue collar business owners, electrical, HVAC, plumbing, landscaping, garage doors, roofing. So if you own a home service business and you're kind of tired of the cash flow up and down yo-yo effect and just always not being able to sleep well at night because you're uncertain of what do I do next to actually get to where I want to go. You see all the other people on social media and you hear all the people on the podcast doing millions and millions and millions of dollars, scaling, acquiring, selling, and doing all those things. You're in the right place. What we're going to dive into today are the main things you need to put on a dashboard. So my opinion, as the CEO, as the owner of your home service company, you need some sort of dashboard where you can look at it at any given time and know exactly where your business is. So then you know exactly what you need to do. So I'm going to keep this super simple for you. It's going to be the A, B, C's of your dashboard. So what are the A's? Again, these are all numbers that I would recommend you have on a Google Sheet, on a spreadsheet, somewhere, whether you're doing it, your office manager's doing it, somebody is doing this on a weekly basis so you can start to track the trends of your business. If you need help with it, I'm happy to help. Put a comment below or reach out to me. If you just go to thebluecollaradvisors.com, you can book a call. We do a free business evaluation, free financial assessment. But whatever works for you, the key is to just get started. So the A's stand for your accounts. So the accounts are super simple. How much money do you have in the bank and how much money do you owe on lines of credit cards? If you have any store accounts with your vendors, I'd like to exclude any long-term assets like any debt on vehicles or equipment because those are covered, the notes are covered by the asset. So the first thing I like to look at is what's called a current ratio. It's super simple. All it is your assets divided by your liabilities. Ideally, that number is more than one, which means if you're able to sell all of your assets, you could cover all of your liabilities. So what are your assets? Mainly, it's going to be all the money in the bank because it's all current assets. So current ratio are your current assets divided by your current liabilities. So that also includes, you can include accounts receivable in there as well. So how much money do people owe you? How much money's in the bank? And then if you have any money in transit, so maybe they paid on service time, but it hasn't hit your bank account yet, that should show up as undeposited funds as well. So add those things up, divide it by any of your liabilities. Your current liabilities, I should say. So what are your current liabilities? It's going to be your credit card. It's going to be your lines of credit, store accounts, vendor accounts, anything like that. So that's the first thing I like to look to. The second thing is super simple. How much cash do you have in the bank? That's it. So we like to track how much cash is in the bank. A great way to really improve the cash in the bank is implement something like Profit First, but it's just super simple. How much money's in your bank account? The third thing I like to look at is number of months of expenses you have in the bank. So this tells me how well can I sleep at night? How much certainty do I have? How much confidence do I have that my business is doing what it's supposed to do? So all we do is take the amount of money in the bank, say it's $500,000 you have in the bank, divided by your average monthly expenses. Say your average monthly expenses is $100,000. 500,000 divided by 100,000 equals 5. So you have 5 months of expenses in the bank. Ideally, you get that number to at least 6. When you're at 6, you no longer have to operate scared, operate stressed. You can really have the confidence that you're going in the right direction. You really can start to focus on building and scaling, achieving your goals, achieving that freedom, the wealth, the prosperity that we're looking for. So those are the three things in the accounts bucket. So current ratio is just your current assets divided by your current liabilities. The second thing I look is just track how much cash is in the bank. And then the third thing is number of months of expenses in the bank. So that's accounts. The next thing I like to look at is the B's. So we said the A's, the B's, and the C's. B's are your books or bookkeeping. So I like to look at how many invoices did we send out every week. So over time, you can see a trend. Ideally, it's going up. So how many invoices do we send out every week? And then what is the average ticket on those invoices? So track that every week as well to see if we can pick up on any trends. The best part about numbers is when we can start to pick up the trends, we know that either something's working well or something's not, but it allows us to make educated decisions instead of emotional decisions. We've all been in that place where something doesn't feel right as the owner. We know something's off. But if we're not tracking all these numbers on a regular basis, again, this is creating new habits, then we don't know what the issue is. And if we don't know what the issue is, we don't know what's causing it in the first place. So back to bookkeeping, number of invoices and average ticket. The other thing I like to look at is accounts receivable. This could also be up into accounts if you want it, depending how you do it. But either way, we need to know how much money do people owe us. So that is a big issue with cash flow. So accounts receivable is how much work have you completed that you have not gotten paid for. The next thing I like to look at is your labor rate. So your labor rate is your field labor. So all the money that you pay your technicians to deliver the service divided by the revenue that they did that week. So our labor rate, we can either do it on a running basis of year to date, or you can do it on a weekly basis, whatever works for you. The key is to just get started. The next thing we like to look at is material rate as well. So what are we spending out of revenue on material to deliver our service? So that's the next thing I like to look at is labor and material rate. Then the last two, very important, is your gross profit. So there's a lot of videos on this channel about gross profit, but gross profit is not how much money your business did in revenue. That is revenue. Gross profit is revenue, so how much money you brought in, minus cost of goods sold. Cost of goods sold, the two main things in cost of goods sold is your field labor. So how much do you pay your technicians, your apprentices, everybody out delivering the service? What are their payroll taxes as well? What is their workers' comp? Do you contribute to their 401k? Do you pay for their health insurance? Paid time off, all those things, that's your labor. And then material is pretty self-explanatory. How much material do you use on a regular, how much material did you use in your business to deliver on the revenue you did? And then the other part of cost of goods sold is anything else related to delivering the service. So if you're in electrical, plumbing, or HVAC, that could be the cost of pulling permits. It could be small tools and equipment. It could be uniforms. Anything that goes directly to delivering the service. It's going to be fuel for your vehicles because we're only driving those vehicles if we're delivering service. So that is part of doing business, cost of goods sold. So revenue minus cost of goods sold equals gross profit. Our gross profit margin is what we want to track, is gross profit divided by revenue. So that's the next one. And then the last thing in the books section is our net profit. Net profit is how much is left over. So what is the bottom line divided by our revenue? So we want our net profit margin. So our net profit margin is net profit divided by revenue. And a couple of benchmarks to look at least for those last two. Every other business is different as far as labor and materials and all that go. But great thing to shoot for your gross profit is 60%. Your gross profit margin, I should say. Gross profit margin should be 60%. Net profit margin should be 20 to 25%. So other benchmarks really are industry specific. Other than accounts receivable, in my opinion, your accounts receivable should be 0. That means you get paid right when the job is done. So that's the B's of bookkeeping. Number of invoices you send out on a weekly basis, average ticket, accounts receivable, labor, material, gross profit, and net profit. So we did the A's, that was our accounts. We did the B's, that was books or bookkeeping. Now we're going to C's, which is clients or customers, depending on what you call them in your business. So what do we look at for there? One of the things I like to track is number of reviews, because depending on how your business is set up, me personally, I would have performance pay set up where your technicians get compensated the more reviews they get that mention their name. So how many reviews are we getting on a weekly basis? So we can kind of track and see where we're falling off. Do we need to work on more training for that? Do we need to teach them how to ask for reviews, whatever it might be? So that's the first part about clients, is reviews. The next thing is obviously acquiring clients or customers. So what are we spending on marketing as a percentage of revenue? Now, depending on what stage of business you're in, how strong your brand is, and where you're trying to go, I would say on average, your marketing spend should be between 8 and 12%. If it's below there and you can't afford marketing, but you want to market, that means there's something wrong with pricing. If it's above 12%, I see plenty of businesses above 12%. If you're getting a return on that and you're scaling quickly and you're okay having a lower net profit because you want to go acquire more customers, that's totally fine. The key is to have a goal, have a target, and then make sure you are tracking it. The next thing with marketing is your customer acquisition costs. So how much does it cost to acquire a new customer? We need to track that, so that way we know how much we can pay for a customer based on what our average ticket is and all the other things that go into it, but we need to know what our customer acquisition cost is. So that's the third thing in clients or customers. Either way, they start with a C. The next thing we want to look at is call booking rate. So now that these people are calling, how well are we booking them? How is our CSR doing as far as booking calls? So in my opinion, a call booking rate should be at least 85%. That should probably be the goal. Anything over that is great. Anything below that, there is an opportunity to increase revenue without doing anything else other than working with your CSR on booking calls. How do we improve that number once we're tracking it? I would say put them on performance pay. If their number one goal is to book calls, we need to incentivize that, which means we need to pay them when they're meeting or exceeding goals. And if they're not, they then need to be in more training, which means we need to have a scorecard. So they need to know exactly what success looks like. What are we expected to do? Then we need to have training and standard operating procedures, also known as a script, to make sure they know how they can achieve success so they can hit their goals. So we need to have the performance pay in place. We need to have the scorecard in place. We need to have the training in place. We need to have the role playing in place. We also need to listen to those calls. So whether it's you as the owner or if you have a call center manager, they should be listening to calls on a regular basis. My personal opinion, being a systems, processes, scheduling, numbers person, I would set aside time once a week to listen to 2 or 3 calls that your CSR booked and 2 or 3 calls that they didn't book, so you can provide feedback, work on training, work on role playing, so that way they are set up for success. And then obviously, that will allow us to continue to track, are they improving? So call booking rate is huge. That's the next part of clients. And then the last one is our close rate. So how well are our service technicians closing out there when they are presenting options? What is that rate? So every industry is a little bit different, but as we start to track it, what gets measured will get improved. So if we know we're only closing at 55% and our goal is 65%, we can track it over time, and then we can see week by week, are we improving? If not, what do we need to do? What kind of role playing do we need to put in place? What kind of ride-alongs do we need to put in place? What kind of training do we need to put in place? So either way, we got to track it. So wrapping up that C section of clients is number of reviews. What are we spending on marketing as a percentage of revenue? What is our customer acquisition cost? What's our call booking rate? And then what is our closing rate? So wrapping that all up so you don't have to rewind and go back, starting with accounts. So accounts is our current ratio, which is current assets minus current liabilities. Then we want to know how much cash we have on hand. And then we want to know the number of months of cash we have in our business. Then moving down to the books part of the B's. So number of invoices, average ticket, accounts receivable, labor rate, material rate, gross profit, net profit. And again, gross profit and net profit, I want those to be margins, so that way we know how we're doing relative to all the other time periods. And then getting to C's, which is clients or customers, number of reviews, marketing spend as a percentage of revenue, customer acquisition cost, call booking rate, and then our close rate for our technicians. So that is how you put together a dashboard, a scoreboard, whatever you want to call it, to track all the important KPIs. Whenever you hear someone talk about KPIs, that stands for key performance indicator. So when I'm working with my clients as their outsourced CFO, these are some of the things that we look at that are driving cash flow. My job as their CFO is to make sure they are creating consistent positive cash flow, so that way they have a financially healthy business. They have clarity on where they're going. They know exactly how to get there. And then when things come up along the way, the numbers will tell us what's working and what's not working. If you have any questions, post them in the comments below. I will respond as quickly as I can. Again, you can also head on over to thebluecollaradvisors.com. Go there, connect with me, and we'll talk to y'all soon.